Eric Muad with Muad.com with another mentorship video. Let's take a look at some questions that you've raised here, and we're going to be taking a look at a couple of stocks that I mentioned in today's subscriber stocks to watch. So INSY is one of them, KYTH, and then CYBR, HACK, and finally FIVN. All right, so let's go to the questions here, and we begin by a question where you are asking about the quality of INSY. So let's go to the monthly. The monthly is our default. So we're going to compare INSY in relation to the breakout on the monthly. So the quality of that breakout as opposed to the RSI and the MACDs. So we can see here that the RSI is trading at all-time highs, and we can see that the MACDs, if you take the thin line, orange line, the thin line is already trading at all-time high. So I'll take that. Remember, one thing I want to talk about in this video is you're always looking for the earliest reason to buy a stock. Sometimes when you wait for everything to align itself, it's gonna be too late. Not too late, but you're gonna miss out on a good portion of the move. So when you find something that is solid and you can see one or two things slightly off, you can still buy the stock, because stocks have a way of correcting themselves. So in this particular instant, even though the MACD is not at new highs for a stock with not enough data, I can use the secondary MACD, which is, or the line, which is the orange line, which is breaking out here. And this breakout to all-time highs is what you need. So we are comparing INSY as a comparison with a similar sector stock, or a stock in the same sector, KYTH. On the monthly, KYTH is also showing a breakout above all-time monthly closing highs. And you pointed correctly that here we have a problem, that the RSI is not making 3-year highs. So there is a little bit of a problem. I agree with that. And also we can see that on the MACDs are fine, because one of the MACDs hasn't broken out, but the other MACD is now at all-time highs. Yes, it's only been trading, or the MACD has only been displayed for the last couple of months, but it's at an all-time high. So I think you ask a good question as to which one of the two is more timely, or which one looks correct. The one thing I'll say is I'll go with INSY, for the simple fact that I just like the trend. Take a look at this upward, nice trend, and again, nice trend. If we take a look at KYTH, there's a little bit of a volatility here. Up, down, up, down, up, down, and down, and now gradually up. So between the two, even without looking at the indicators, we can see that you're going to get a better ride in terms of if the history is going to repeat itself, by owning INSY, because of this nice trending action previously, and even recently, nice smooth trending action. Also, between the two of them, when we compare the RSIs, it is obvious to see here that you want stocks that are making 3-year highs, yes, but the strongest, most powerful signal is when they are making all-time highs. So that's what you should be paying attention to. Given a choice between 3-year highs and all-time highs, you always want to go with the all-time high, because the stock is telling you that's the most powerful it has ever been. So between the two, I think the obvious choice on the price, on the RSI, is INSY. And now if we take a look at the MACDs, I think the MACDs, I would say both of them are okay. They are not perfect, but they are okay. In fact, I would say they are great. We can see here a move to all-time highs on the orange line, which is good. on INSY. And if we take the MACDs for KYTH, we see that the MACDs, yes, on the one of the MACD settings like we discussed, not perfect, but it's okay. But we can see at least one of them has already broken out. So both of them, in terms of the MACDs, in my opinion, they are fine. And because you can't own all the stocks in the world, nobody can own all the ideas in the world in terms of stock pick candidates. You always want to go with the one that is the best, the one that meets all the requirements you are looking for. So between the two of them, the first two I mentioned, it's obvious that the stock of choice here is INSY, and the buy point there is this monthly closing high, as I mentioned, of 60.06. So that's an easy choice. Between the two, I would go with this one, and I would ignore KYTH. And this is a good buy point. It's a little bit extended. Right now trading at, let me do the math here. So right now it's trading about 7% above your ideal buy point of 60.06. And remember, we had talked about the 5% window. So 5% window on an ideal entry, 5% window above your ideal buy point. So we are not getting that in this example, but I think 7% is not too extended. I would not turn away from a position just because of 7%. So yes, if it can pull back slightly and come back to that 5% window, then you have a reason to buy. But I think even 7%, I would still consider that close enough. Now, one thing you can do is try and find other buy points. For example, here you can see that this is the previous weekly closing high, which happens to be at 60.31. So in case you buy it at 5% above the ideal monthly buy point of 60.06, and I remember this is just 60.06, this is just a rough estimate, plus 5% above 60.06. You can also use the weekly closing high. Your entry there would be at 60.31, or look at it this way: you can buy it right now and set a stop if it moves below 60.31, which is the most recent weekly closing high. So you can also use that right here as your stop level. So 60.31 is a previous weekly closing high. I don't see a problem right now in buying it even at 7%. But if you really want to be defensive, you can also go to the next level, which is the daily, and use this daily closing high as a stop. Now that the stock has broken out, you can use 60.96, which is this previous daily closing high. If the stock comes back below that level, you can get stopped out, and that would protect you. You'd probably be losing about, let's call it about 6-7%, so maximum 8%. But at least here in this example, you'd be losing about 7 or 6%. So anyway, so you can use the monthly, which is 7%, currently 7% above the monthly buy point. But if you're uncomfortable with that range, you can wait for it to come back to your 5% window. Wait for it to come back a little bit, if it can, to your 5% window. Now the problem is that the best stocks don't wait for nobody. So keep that in mind. The best stocks have a tendency of just taking off and not looking back. So that's why I'm saying 7% is not a big deal. Or you can go to the next thing I was saying, which is use the weekly as your stop, now that you are buying it a little bit on the extended side above your 5% window. Or you can go, if you really want to be extra careful, use this previous daily closing high for a stop. All in all, now that we've compared the two stocks, INSY and KYTH, it's obvious that the winner in terms of how the chart looks like is this one. And being that you can't own all the stocks in the world, given a choice between a couple of stocks, go with the one that gives you the best entry range, the one that has the best flow in the chart, and also the one that has good technicals in terms of the MACD and also the RSI on the monthly especially. Now before I leave this one alone, the KYTH, just one thing to note here is, yes, right now the monthly doesn't look great, so we don't have to own it here, because the monthly, as we noticed, the MACDs, the RSI, actually the RSI is not at 3-year highs, and neither is the RSI above 69.1. So we see some problems with this one, even though I think eventually it can repair that. But what you can do when a stock is not perfect, in this particular instant, it has yet to break out above recent weekly closing highs. So instead of just disregarding the stock, you can set a higher alert, because if it breaks out down the road above 53.13, any breakout above this level down the road would suggest that the monthly RSI has improved. So you can set an alert for this breakout, or you can also set an alert for the all-time weekly closing high. So that's another option. And the all-time weekly closing high in this particular instant is 54.21. So you have lots of options to follow a stock. So the monthly is not great right now. We can go to the next level, which is the weekly, set alerts, and should the stock at some point break out above any of these 2 points, you can revisit the monthly chart to see whether A, it is moving to 3-year highs, or it is trading above 69.10 on the monthly RSI. So don't give up on the stock. You can move your stops or your alert to the higher buy points on the weekly, and that would give you another opportunity to look at the chart down the road. So maybe by the time you look at it weeks down the road, months down the road, when it breaks out, maybe then you're going to have a better looking monthly chart. So the other question was for CYBR, and just for the sake of, let's make sure that we show you what the question is, and so you can take a look here. You can pause the video and take a look at the questions here. All right, so now question is, I had sent an alert earlier, I think was last week, for CYBR, which is breaking out on the monthly above 59.27. You ask a good question, is why are we buying this stock on the monthly when the monthly for an IPO doesn't have no RSI, no MACDs, because it is not mature enough to generate those indicators. So it's a simple answer actually, is in a way we are using other factors. Remember, we are trying to find any reason to own a good stock, and I'll explain that in a second. We had initially bought this stock during the prior breakout here. Why? Because the weekly had enough data at the time. The weekly was moving its weekly RSI to all-time high. So in the absence of a well-formed monthly chart, you have to go and look for the same parameters to be met on the weekly. If the weekly is not mature enough, you go to the daily to find the same parameters, which is all-time highs on the RSI and the MACD. If the daily is not mature, then you can go to the hourly. Typically, this is what you want to do when you're trading an IPO. Whatever time frame is not mature, you go to the smaller time frame, and you keep going to the smaller time frame until you get the time frame that has fully developed indicators. So in this particular instant, we can see that the stock was a buy back in February, because the MACD was also breaking out here in February, or at least the orange line was breaking out in February, and the RSI was also breaking out. And like I said, sometimes because it's an IPO, the charts are not perfect, but the key I have to stress here, it's very important that we understand that the key, if you have to go with a minimum requirement, the only minimum requirement, the absolute must-have minimum requirement is the RSI. RSI has to be breaking out to 3-year highs or to all-time highs. That's the minimum requirement. So the question is, why don't we wait for this to break out above 70.35, which is the all-time weekly closing high? Why don't we wait for it to break out there? Well, because the monthly is giving us an earlier buy point. That's the simple answer. I'll always default to the monthly, giving us a better entry point well before the weekly, well before the daily charts. Now, why would you do that when the monthly chart is not fully developed? A couple of things. I mentioned in a prior video that we are playing this from a theme. The theme is that cyberspace is moving, and we can see that the leadership stock, or one of the leadership stocks, PANW, has already been trading with its monthly RSI above 69.1 going back to middle of last year. And so this has been going on for almost 9 months. So the leadership stock has already broken out long time ago. In fact, it's had several, all these are breakouts. Breakout there, breakout here, and a breakout here. All of this coming past prior monthly closing high. So you got a breakout recently here, another breakout. So this has been going on for a while. So instead of waiting for another stock in the group to move to the weekly breakout, you want to find any excuse to buy CYBR. And the excuse here was that it is breaking out above the previous monthly closing high. So yes, the stock itself might not be ideal, but the sector, the theme is ideal, and the theme is cybersecurity, which has been hot in the market over the last couple of months. So that's what we are using. We are not just buying the stock by itself, but we are using the surrounding factors to alert us to the idea that this could also be doing well, as is the sector. The other question was, how about the ETF that tracks the cybersecurity, HACK? And you can see here that as of right now, it is also breaking out above the prior weekly closing highs on the weekly, and the price there on the weekly closing high is 29.54. So as of right now, it's breaking out to all-time highs, well before CYBR does the same thing. CYBR has yet to move to all-time highs, but this is breaking out. So again, another excuse to buy the most recent monthly chart for this stock. Any reason to buy any leadership stock or any follow, what I'm trying to say, that you can find any reason based on sector performance to buy the next stock that could be a leadership stock in the sector. We also see here that the RSI is moving to all-time highs or close to all-time highs on this weekly chart, and as of right now, we see that one of the MACDs is just recently started showing some data which is at all-time highs. The other MACD has always stayed above zero, so I'll take this anytime. The fact that a crossover above zero is always more powerful, and so I'll take that. In other words, I said earlier, when there's some confusion, you want to default to the main requirement. The most important requirement is the RSI. In this particular example, the RSI is showing signs of moving to all-time highs. Now, so that's why I would go to CYBR on the monthly. We see here that it already broke out. So personally, I would have used this entry point on the monthly. Why? Again, because the leadership stock in the group has been bullish over the last 9 months. So this instrument just started trading the other day or a couple of months ago. If the leadership stock is still on fire, I'm looking for any reason to buy this instrument. Even this breakout above the prior monthly closing highs, to me, was a buy, because it broke out past that monthly closing high after 1 month of rest. So here, the excuse to go along CYBR even though it doesn't have a fully developed monthly chart, and yet we are using the monthly chart for an entry, is because of the surrounding factors. And the surrounding factor is that the sector itself is hot and it is on fire. So in terms of timing, because this is the most recent buy point on the weekly for HACK, the buy point there being 29.57, and so 5% window above that brings it to a price of about $31.04. So the stock is trading at 30.48, so it is definitely within your 5% buy window. So it might look a little bit extended just visually, but from a price perspective and from a percentage perspective, it is still within very reasonable range. So you want to buy it and set yourself a stop. Or let's say if you see that the stock after you buy it is now back below 29.57, which is the previous weekly closing high, if it breaks back below that, then you want to get stopped out, because that would suggest that the breakout has failed. Now I get the question is, do you wait for the end of the week? Let's just tackle that question right now. Question is, if this breakout fails, let's say it's a Tuesday and it's trading below 29.57. If it's a Tuesday, it's not the end of the week, and it's trading here, do you get out? Well, the truth is, if you had set your stop, let's call it at just below 29.57, you want to get stopped out whenever it takes place, on the day, on the week, on the minute, because you don't know whether it's going to stop there and bounce and continue higher. You don't know that. You don't know that it's going to continue going down. The reason why we have stops is just in case there's more downside. We don't know that whether we are being stopped out at the lows, but all we know is that the stop is there to protect ourselves. This is a good example because previously there was a breakout here, right there, and you can see that the stock did go higher on this weekly chart before coming down. It did jump below the previous entry level, so below the blue line here. And so somebody who would have set a stop at the previous weekly closing high would have been stopped out. And yet, by the end of the week, the stock did not close below that previous weekly closing high. So yes, these types of things happen. So given if you had set a stop, you would have been stopped out, yet the stock closed right there at the week, and since then it's been moving higher. So are you going to get stopped out by mistake? Yes. But if you trade without stops, then you open the possibility for lower prices, much lower prices. So at least by setting a stop somewhere where in a predetermined range, you know your risk. And if you know your risk, then you avail yourself to any opportunity. All right, the other stock that you asked about was FIVN. And here we can see that on the monthly, we don't have enough data on the monthly RSI. Because we don't have any data on the monthly, I went ahead and used the weekly chart. The next level is the weekly, and we have a fully developed RSI on the weekly. What we see here is that the RSI has a chance right now of breaking out to all-time highs on the weekly RSI, which is exactly what we want. So there's an opportunity there for this stock to break out. Okay. Also, I like the fact that the RSI has a chance of staying above 61.8 for the first time ever. That also leads to a big push. So a breakout and also moving above 61.8 for the first time is a good indication of momentum. This is the most recent weekly closing high. We have about 3 weeks of rest since that high, and now we are breaking out on what should be week number 5. So week number 1 is the closing high, and that closing high is at 5.63 right there. So this looks good in my opinion. The price is breaking out. We have a crossover between the 13-week moving average and the 34-week moving average, which is also another indication of momentum, which is good. We are trading above 5.63, the previous weekly closing high. We've had 1, 2, 3 weeks of rest. We are breaking out on week number 5. Good. The RSI is also pushing to all-time highs and trying to move above 61.8, which is great. And we are looking at the MACDs on this weekly chart, and we can see that both MACDs are already trading at all-time highs. So this is what we want. So if you are looking for something in the technology space, this one is perfect, and it is definitely within your 5% window, which should be the 5% window. So that's very easy to calculate. Should be something, so that's 5.63 is your ideal entry point, and of course 5% would bring it to 5.91. Stocks trading at 5.84, so you're within your 5% window of the entry above this level. Also, to be defensive and to have some protection, it's good to set a stop, and I would recommend setting a stop below 5.63, because if it moves back below 5.63, the suggestion is that the stock is failing to break out. And as an example here, we see a good example here where we had a breakout attempt here that failed, and after this breakout attempt you can see that the stock did slide. Also, we see that there was another breakout attempt that failed, which was past this prior. So there was a breakout attempt previously here that failed. The stock eventually moved back below the breakout level, so you had to have been stopped out here. So yes, right now it looks good, but you need to set a stop just in case it does not hold. Otherwise, in my opinion, it meets the minimum requirement, and that's why it was on the stocks to watch list that I sent to the general subscriber base. So in conclusion, the only stock that did not seem to have a great looking chart was KYTH, and we decided that we can use future weekly breakouts to revisit this stock. So for now, probably not the best one, but down the road we can take a look if it breaks out past its next weekly closing highs. Maybe at that point the monthly charts are gonna be fully developed and they're gonna be looking at least with minimum requirements met. Otherwise, the other stocks you mentioned look great, and the other one, the cyber security ideas, they also look great. So I would still look at those as being timely ideas. And of course, finally we took a look at FIVN, which also looks great. Otherwise, let me know if you have any other questions. Eric Mwathe, good luck, peace, and blessings. Woo!